Hey everyone, Roku stock is down 32% off its high in the last 3 months, which has some investors asking if they should buy Roku stock on this dip. So I'm going to take a closer look at Roku near-term results, look at longer term what's going on, look at the prospects over the next 5 years, weigh it all against its valuation to determine if I think Roku stock is a buy on this dip here.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Alright, like I mentioned at the top of the video, Roku stock is down 31.86% in the last 3 months. That has a lot of investors, kicking the tires, looking around, seeing if Roku makes sense here at current valuations. Now, if you look at Roku longer term, the company's done an excellent job growing revenue, $3.485 billion in revenue, and that's up from less than $500 million in revenue in 2018 in a trailing 12-month period. Roku, of course, makes it easier for people to stream television. Roku makes it easier, more convenient for folks canceling cable and going with streaming subscriptions. Roku itself has the free ad-supported channel, which is gaining popularity among its viewers. Roku, arguably, has one of the best-in-class operating systems for televisions in the areas where it operates. And now, a big decision Roku made is to get into manufacturing its own TVs. That's a big step, change in Roku's business model. I'm going to talk a little bit more about that a little later in the video. Now, looking at more recent results, Roku achieved positive adjusted EBITDA and free cash flow in 2023. That was a year ahead of schedule. They told Wall Street they weren't going to achieve this until 2024. I'm always impressed with management teams that set out a target and achieve the target. I'm even more impressed when management teams set out a target and achieve that target ahead of time. This is in stark contrast to other companies. While you're here, management teams and CEOs set out these ambitious targets, these ambitious goals, and then continue to delay and disappoint investors while setting out even more ambitious goals for the future. I hate to continue picking on Tesla, but Tesla's been notable for this, telling investors they would have driverless cars, robo-taxis, in 2015, 2016, telling investors it was 1 year away. And then just recently, they're going to make an announcement on driverless cars, talking about robo-taxi announcement on August 8th, when they were telling us 3 years ago that it was going to be out and implemented already. So that's a stark contrast between management teams, companies that earn your trust as an investor, telling you they're going to do something, following through on it, and actually delivering results. Kudos to Roku management team here. So from this improved position, their operational efficiency has improved. Now they're going to focus more their management attention in 2024 on innovation and growth. And I like to see this from Roku because they've demonstrated that they can deliver products that customers really like. And they came out of nowhere with their Roku operating system, and now it's the number one operating system in the US, it's the number one operating system in Canada, it's the number one operating system in Mexico. So they've demonstrated that they can deliver innovative products that customers appreciate and customers spend money on and spend time on. And so you want them to continue on that path because they've demonstrated a capability in this regard. So looking at the year, 11% revenue growth. Active accounts increased by 10 million from 2022. They now have 80 million active accounts on the Roku platform. That's critical because Roku makes money from folks spending time on its platform. So when folks are watching TV on one of their Roku devices, then Roku, when there's revenue generated from advertising, Roku gets a piece of that action. And so the more people Roku has on the Roku platform, the more opportunity to generate ad revenue longer term. And looking at ad revenue, ARPU was $39.92 on a trailing 12-month basis. That was down 4% year over year. That was one of the disappointing things about Roku in 2023. The average revenue per user was down. So Overall, a good year for Roku, especially achieving positive adjusted EBITDA and free cash flow for 2023, a year ahead of schedule, and making that big leap forward in manufacturing its own TVs. Now, I said I would talk a little bit more about that, and I will here at this point. This is a big change in the business model, going from partnering with manufacturers to now manufacturing your own TVs. There is no telling if Roku will find success here. Now, there is some evidence that it will, given how successful Roku has been with their Roku players and their Roku audio devices, the Roku controls. All of their technology that they've been putting out has so far been very well received. Customers are liking it, they're paying for it, 80 million active accounts, revenue increasing significantly over the years, number one operating system in the US, Canada, and Mexico, and on and on and on. The evidence comes in that Roku knows what they're doing. They know their category. And so branching into televisions is a logical step. However, I can't give them credit for that success before they actually show that they achieved that success. Now, I'm giving them a higher probability of success because of the history of innovation and the history of success. So they are getting a higher than usual probability rating from me because of the evidence they've shown in the past, but it's still not 100% that I'm thinking they're going to be successful in this. And this move makes the company riskier because that's more capital intensive, more money needs to be devoted to manufacturing, and that makes the company riskier because if sales decline, they've got those fixed costs in place, and that's going to decrease profitability even more. And on the flip side, it gives the company more upside. Not only is it riskier on the downside, but also now has more upside when things go well. If it does achieve success here, the profit prospects are now that much better because it's now dug in deeper and now it's going into that category that could deliver higher returns on investment. Longer term, looking at Roku's operating profit margin, in the boom times during the pandemic when people were spending more time at home watching content, Roku's operating profit margin was approaching 15%. And so they've demonstrated they could run this business profitably at a larger scale. However, since the economic reopening, their operating profit margin has collapsed. It's rebounding negative 22.74%, up from closer to negative 30%, but it's still significantly negative. One of the reasons for this is not only were people watching less content on the Roku platform, but also Roku decided not to increase prices on its products. Inflation hit Roku just like everyone else. Management told investors that they're deciding not to raise prices on customers and they wanted to absorb those higher costs. That was a strategic decision from management, and the result of that was they added millions more active accounts than they would have if they didn't make that decision. But it cost them. It cost them significantly. So it remains to be seen over the next 2, 4, 6 years if that decision was worthwhile. If they continue to find success in the average revenue per user, and those users stick around longer term, then it was a good decision. But if those users go away from Roku, go away from the Roku operating system, then it would turn out to be a poor decision. So it's still too early to tell whether that was a good decision or not. Cash flow from operations, Roku has been volatile in recent quarters, still positive though, 16.33 million positive, over 150 million in the prior quarter before this one, and free cash flow positive for the year, just like management told us, ahead of schedule. So cash flow from operations going better than expected from Roku. And again, just like the operating profit margin during the earlier stages of the pandemic, the company was demonstrating solid growth on this metric. Although I will say the cash flow from operations will be more strained now that it's entering manufacturing televisions. It needs to spend money up front on the manufacturing capacity, on manufacturing materials to make the products, build up inventory, and then the cash flow comes in later after the product is sold and after Roku gets paid from customers and supplier partners and buyer partners, I should say. Looking ahead, longer term, over the next 5 years, the analysts on Wall Street that are following Roku stock expect it to deliver 43% earnings per share growth over the next 5 years. That's a little more optimistic than I am on Roku's EPS growth over the next 5 years. Nevertheless, these are analysts on Wall Street that are closest to Roku and arguably know more about Roku than I do. And they're expecting 43% earnings per share growth from Roku over the next 5 years. And finally, valuation. Roku's trading at a price to free cash flow of 49.72. I couldn't use the price to earnings forward ratio because the company's still significantly negative in earnings per share. But the price to free cash flow of 49.7 is reasonable, I would say, for Roku, considering its growth expectations and considering the position that it's in. So, with all that being said, what's my final conclusion? Is Roku stock a buy on this dip? I'm going to say no, not yet. I still think the stock is a hold. I want to see a little bit more from Roku in terms of how the manufacturing of televisions are going. I want to know more information about that. Other than that, if the valuation were to come down a little bit more, that would sway it over to that direction. But more importantly, I want to know more about the manufacturing of televisions and the unit economics there. If in the next quarter they come out with more information on that and I like what I see, I'd be willing to recommend Roku stock even at this valuation if I like what I see from what's happening so far in the manufacturing. So that's a big key that I'm focused on with Roku. And given that the valuation is not cheap, I can't recommend it as a buy when that big decision is looming large and I don't have enough information on how it's going so far. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button and I'll see you again soon.